All right, folks. I know it may seem depressing to look at the share price going down and down and down and down. But actually, in the midst of all this, there is actually some pretty interesting news to actually see based on what the market is going, especially after the inflation data that came out this morning. And it came out hot, 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 but not as bad as some people would expect, right? And when it comes to AMC stock, I want to look at what these inflation numbers might mean for AMC stock in the future, the very short-term future. All right, I'm not talking about next year. I'm talking about potentially next month and the month after that. All right. So we had the numbers coming from inflation. And the very indicator, the very only indicator or main indicator we're using to track inflation in the US is what we call the CPI, Core Price Index. All right. It's pretty much a basket of everything we use on a daily basis in our daily life. All right. Transportation, food, gas, energy, etc., etc. All right. So it came around 8.5% in March. All right. Please stick with me here because as soon as we see what is going on here with this inflation data, we're going to see exactly how it will impact AMC and those holding and potentially willing to buy more AMC stock. Look, in March, it came in at 8.5%. So it wasn't as bad as what a lot of people were expecting, but it's still very high because it is still jumping 1.2% from last month. And last month we thought it was already high at 7.9%. But when you look at how some of the components of this inflation data are running as high, man, it is incredibly high. And the problem is, it doesn't seem like it's going to end anytime soon. I'm talking about food and energy. Look at energy today. Energy jumped back $6.2. At some point, it was $7 a barrel, crossing that 100 barrel price again. Why? Because, as I mentioned, folks, this is not going to be something that we're going to ease in the next short term. Why? Because of, first of all, what is happening in Ukraine, what is happening in Russia, and all the sanctions around Russian oil. But even without the sanctions happening in Russia, it was already supposed to go high. I'm talking about oil and energy as a whole. Now, you add to that gas. Man, gas is just food. Food is just something that we need food to eat, and food is already gone 9% just regarding at last year, or is it last month or last year? Anyway, it's incredibly high. And corn, wheat, all of these other things are going to be impacted by some of the sanctions put on Russia. So inflation is going to remain, I'm sorry, but inflation is going to remain high for another number of months. But there is the good news for us holding AMC stock. Why? Because the Federal Reserve is actually looking at this to start being as aggressive as possible. It is true that they're looking at what we call the core CPI, all right, which excludes foods and energy. But if you exclude food and energy, you're pretty much excluding 90% of the US population. And those people are hurting because those prices are getting higher and higher month after month, especially with this conflict in Ukraine. So that means they are going to start pushing for interest rate to increase, all right? Because an 8.5% inflation this month of March, do you think what is going to be in April or in June? I mean, personally, I think it's going to remain higher. But it's good news for us. Why? Because Federal Reserve is going to start pushing, as I mentioned, and it means maybe we could get a surprise. And by surprise, I mean, instead of raising interest rates to 0.25% or 0.5% in the next time they meet, I think it's going to be next month, and the following month, I mean, since personally I think it's going to keep getting high, they're going to have a lot more if they want inflation to go back down to 2%, which is the target. The target of the central bank is to keep inflation remain at 2%. So what does it mean for you holding AMC stock or for you willing to buy AMC stock? Well, good news, because going into that environment, I'm talking about next month, 2 months, the next 3 months, It means that for the short sellers, which by the way, in order to keep the price of AMC this low at the 17, like today, for no reason, again, it dropped 7%. Like it dropped yesterday and the day before yesterday and the day before yesterday and the week before yesterday. So just to tell you that in order to keep these prices dropping every single day, they had to go into so much debt to fabricate all of these fake shares. All right. So in order for them to continue to do that, they will have to bring an additional cash, an additional collateral, an additional something to maintain those positions, because the cost of that money they borrowed is going to be a lot more expensive. When you think about it, it may not sound as much when you think about 0.5% on maybe $10,000. No, we're talking about billions of dollars. So those are tens of millions of dollars they will have to come up with on a regular basis to maintain, and on a daily basis to maintain those short positions. So the bottom line is, what do you think is going to happen to the little shorts? We're not talking about yet to the Citadel, or the Virtue. No, just the little shorts who came here around maybe 30 or 20, or who came here around 40. What do you think is going to happen to them? The pressure is going to be so high that they will have to start looking for a way out. And that is when we can expect another big squeeze ahead. If in between, we haven't heard something totally catalytic to push the share price higher. So, definitely things looks bad when you look at the price, but don't look at the price, because this price is synthetic. It is not natural, as it's not natural for a stock to drop every single day almost 10% without people selling the stock. So they have to fabricate this to give the impression to the market and to retail investors that the stock is dropping. But in reality, they are doing whatever they can to kick the can down the road, because at some point they will have to pay the bill. But the bill is getting higher and higher as we are getting into summer with inflation remaining high. So you want to remain invested if you want to get advantage of this squeeze coming, because otherwise I think you might regret it. So I'm choosing to remain, but I'm willing for prices to potentially go down a little bit more in order to add some more to my position, because I've been saving a lot for this potential price to come down. So I will see you in the next video, folks.